Hello, everyone. My name is Dominique, and I have the rest of the Greenleaf team here with us today. We have our two hosts, Andrew and Dave, and helping me drive this live stream, we have Natalie. So today we'll be discussing the Family Dollar opportunity, but specifically be bringing a dollar store comparison for you all this afternoon. So before we dive in here, as always, Greenleaf Connect is a private Connect event or live stream conducted every Thursday afternoon with a new topic every week highlighting a portion of our business. Private Connect events are more interactive while live streams are open to the public. All right, so before we dive in here, as always, we like to provide some rules of engagement. So first and foremost, you do have the option to change your presentation view. Feel free to click and drag to make the presentation bigger or smaller, or you can change it to speaker spotlight view. This is a friendly reminder that this live stream is recorded and will be shared with you at the end of the week this week. And at the very end, folks, we have a Q&A session just to answer any questions that you may have. Feel free to use the Q&A feature located at the bottom of your screen under the reactions button, and we'll use that to facilitate the conversation. So before we dive in here, really what we intend to go over here, folks, is really a business case for dollar stores in general. Don't let that go over your head. We'll bring a dollar store brand comparison, specifically Dollar General and Family Dollar / Dollar Tree. And then we'll dive into the opportunity itself. And then again, we will close with that Q&A portion. All right, without further ado, I'll pass it over to our hosts, Andrew and Dave.
All right, thank you very much, Dominique. So thank you for joining us all today. We're going to get kicked off with just discussing this whole concept of the dollar store, right? So we've got Family Dollar and Dollar Tree, which are like left and right Twix, but actually sort of different, and then Dollar General. So if we look at dollar stores across the U.S., this is a map of where everything is. So it's a roughly $90 billion industry that these three brands, Dollar Tree, Family Dollar, and Dollar General, they make up about 70% of that market.
How many Dollar Tree and Family Dollars are there?
So we've got 16,000 of the combo. So Dollar Tree and Family Dollar are one entity.
Yep.
And there's 16,000.
And to get this out of the way, they are a merged company of two brands. And what happened?
What happened? They merged.
Yes.
But Dollar Tree bought Family Dollar.
Right. And they're basically number 2 and 3 said how
Trying
can
to
we
be
get
number
close to
one.
number 1.
Yeah.
And number 1, of course, is Dollar General. And so they said, well, let's just merge. And they did that. And so there's about roughly 8,000 Dollar Trees now and 8,000 Family Dollars, which total count is 16,000, but they're still trailing Dollar General by a little bit. Dollar General is at 17,000 right now.
Yeah, and just because they all merged together, you can see the different footprints. If you kind of, what are those dot charts? I remember you're looking at, like you stare at them long enough, a picture emerges. That's not going to happen here.
Yeah.
But
A heat map. It's called a heat map, I think.
I know, but the dot maps are more entertaining to look at. We've got Dollar Tree in California and basically in the Northeast, right? So the green dots, California in the Northeast, whereas Family Dollar, you kind of see a big concentration around like the West Virginia mark there. You can see the most density in that area, but they're really Mississippi to the east.
Yeah.
And then
Throughout the Midwest, though, you can see a big line
they're
of
just
Family Dollars.
a little more dispersed out there.
Yeah.
And then Dollar General is just kind of covering the East Coast.
Covering is an understatement, but yes.
Like it's almost fully blue there.
Yeah.
So what do we like about dollar stores and the economics of these things in general? So as early as 2005, so 15, 16 years ago, these brands were doing about $11 billion in annual sales. And as you see this ramping up, we've had this in presentation we did just on Dollar General, where we see continual revenue growth, right? It's like they're opening 1,000 stores a year and they're just continually growing revenue.
Yes.
Here, we look at like 2015 when we had the merger.
And Dollar Tree and Family Dollar right now, they're scheduled to open up about 600 stores this year too. So they're also in a pretty large growth mode too.
Yeah.
And they're also renovating stores, which is also.
Yeah, so they're very much the market segment for this brand of shopping experience just continues to grow. So now 2021, they're at about, $60 billion in sales out of these dollar stores within their footprints of these three brands.
So in 15 years, they have tripled their size.
Yeah.
Tripled
So-
the market.
So the economics of this is like, how are these things making money? Who kind of shops here and how are they doing? When we see, it's that kind of the question of like, hey, why don't we just all go to Costco? Right? Like, why not just go to Costco and spend $1,000?
It's a very big demographics question of who does Costco cater to, who does Walmart cater to, who does Target, and who does Dollar Tree cater to. So when you go to Costco, do you spend $20?
I try not go, but
Yeah.
that's a different, maybe we're doing a Costco presentation soon, but
Oh,
Costco, most of the time, if you go to a place like Costco, you're spending a lot of money to be able to drive down your price per item as low as possible.
and you're also shopping infrequently too. So you're doing more shopping infrequently.
We see on here like a Sharpie pen at the Dollar Tree that costs $1. So Dollar Tree strategy is everything costs $1 at Dollar Tree. Whereas at Costco, the Sharpie pen's only 56 cents, but you have to buy 100 of them.
So it was 1,000.
Or 1,000 of them. You're leaving with the largest box of Sharpie pens ever.
A crate of Sharpie pens
Yes.
sometimes. Yes.
So people, if they're going to Dollar Tree, they're more like, I have a few dollars to spend and I need to get a Sharpie marker. Whereas Costco, people are more prioritizing that, price per item, and they're willing to spend $56 or $560 for a crate of Sharpie pens because they really want to pay 56 cents for them.
Well, also really what's important too is that Sharpie pen that Costco sells and Dollar Tree sells. The individual pen roughly costs about the same, but if you look at the margin that each is making, Dollar Tree is making a bigger margin on the same products. Even though they're selling less of it, their margin is a lot higher, which means the profit margin at Dollar Tree is going to be very different than the profit margin at Costco.
The profit margins at Costco are around 3%, but Dollar Tree is 30%.
And I wonder how they survive on a 3% margin, but
Well, they sell lots of crates of
lots of
everything.
stuff. Yeah.
So the Dollar Tree, this is specifically Dollar Tree in this chart, but this relates to Family Dollar and Dollar General. It's the same strategy. Their price per unit is higher than everywhere you're going. Costco is the cheapest, and you've got Walmart and Target in there that are the in between. With you can put Sam's Club. Sam's Club is a little more cheaper than Walmart on a price per unit.
Isn't Sam's roughly just what Costco is?
They're almost the same.
Okay.
So if we look at, now we take these two brands. So we've got the combo. They're actually opening combo stores, which is intriguing. But we've got the Family Dollar, Dollar Tree combo, and then you've got the Dollar General brand. So you've got two, roughly $60 billion. So between all of these, we mentioned this. We've got about 1,000 stores that are open on the Dollar General side, 600 on the Family Dollar, Dollar Tree side, and then units, 17,000 units.
And I want you to pay attention to a couple of really important points on the slide too, that cash on hand is how these businesses survive. It's how they survive during a good time and a bad time. And so roughly right now, I would have not expected this, but Family Dollar, Dollar Tree actually has more cash on hand than Dollar General, which I did not expect until I did this research, which is interesting. So it's in a really good shape for growth. It's also in a really good shape to weather a storm. Whatever else comes up next, I guess, we had a pandemic last year.
I feel like you made it through 2020 into 2021. You're
Yeah.
probably doing okay.
And what's also important is both of these stores are investing in their shopping experience. So both of them want to make the experience of walking in the door a pleasant experience, and they want to make it a quick experience too. So the ticket item of a Walmart is probably going to be a little bit higher than the ticket item of a Dollar General. So they want to make that 5-minute shop. I think we talked about when you park in the Walmart parking lot and you walk 10 minutes to the front door, and then you walk another 10 minutes to get your toothpaste. It kind of gets a little old sometimes.
Yeah, it's a very different, but even within these three brands, like they have slightly different go-to-market strategies. Where Dollar Tree, everything is specifically $1. So if you buy 5 things, you will spend $5 at a Dollar Tree. Dollar General is not that set dollar. It's more of a things are cheaper store, but they have something, a pack of 5 that costs $5. So in theory, you're getting 5 for $5. And Family Dollar is in between them.
And the footprint of the both stores was also interesting too, where Family Dollar, Dollar Tree has about 190,000 employees, and Dollar General is roughly at 140,000 employees. So that's a pretty big footprint of
Yeah,
resources to
the
manage.
resources per store is much lower
Yeah.
at Dollar General than at the Dollar Tree. Family
Yeah,
Dollar.
and I think that's one of the reasons that, I mean, Family Dollar is trying to make the experience better, and so the only way you make the experience better is to actually have more people in the store.
So, all right, so that's kind of a comparison of these three brands. It's really two companies with three brands that we're looking at. And now we're going to dive into the Family Dollar opportunity that's here in Atlanta. We have it listed as Decatur. This is basically the southeast side of Atlanta, right off of I-20. So we think about, Family Dollar here. So we're buying this in Decatur. It's roughly $1.5 million.
Yes.
It's a double net structure though, so it's not a pure triple net lease.
Right, so we get, for a double net, triple net lease, typically it's tenant does everything. In this particular case, it's called a double net lease. We're responsible for roof and structure and parking lot. And right now because we're responsible for those items, we do a pretty thorough research of what's going to be part of the roof over the next 10 years, what's going to be part of the parking lot.
And when we say structure, that's basically outside physical part of the building.
Outside walls. So everything, you walk in the front door or you walk in the door, they're responsible for everything in the front door.
And then so we are just like a normal deal we're doing, we get inspection reports on saying what's the condition of the building, what's the condition of the parking lot, since we will be responsible for those things long term. And again, we're targeting all our deals are really targeting this 4 to 5 year hold period. And that's really to say going into year 5, we have a decision to make on either selling or holding the asset because we have to refinance that time.
Right. Well, typically too, our sell point is right before the lease renewal, or right when we get the lease renewal, that's the sell point, and our lease renewal will be just under the 5-year mark.
Yeah.
And so ideally, we sell it literally just a month before we renew the lease to get the most value for the property.
So we're gonna just jump to like location quickly here. So we've done a bunch of deals all throughout Atlanta. In this one, you can see the little Family Dollar check mark there. It's right next. This is just a heavily trafficked area, and it's right at the intersection of 285 and 85.
Yeah.
So, coming out of Atlanta, you've got 20 that goes east to west. So this is the main highway, 285 on the loop, and we've got 75 and 85 that are just north of that. So 285 and 20 right here is a pretty swamped area.
I wish we had a picture of the intersection too, because these properties survive on cars driving by it, and so the traffic count, it's in a later slide, is just crazy high.
Yeah.
Very, very high.
It's very busy.
Very busy. Yeah.
So if we look at, okay, why do we like this Family Dollar? So we're always going to compare. We're going to jump into some placer data that we do have, but we're going to compare it to other leases and sales that have happened specifically with this brand. The one benefit of these larger brands is that there's a handful of transactions everywhere that we can compare them to. So this top one here is us. The top one is the Decatur.
And then we took all the the Metro Atlanta area, we took all the comps that sold in the last year, and this is it. And so if you look at it, it's a very compelling story. So number one, the average comp is selling for about $286 a square foot. We are buying this one for $165 a square foot, $100 below what the average is selling for over those past 3 sales. And then the cap rate is again phenomenal. So just remember these numbers because we'll talk about it later. But right now, the average Family Dollar is selling for a 5.82 cap.
You say all three of them really quickly.
Dollar General, Dollar Tree, Family Dollar cap. All right, and then we're buying this at a 7.74 cap, and so we are buying it at a very above average cap rate for a very good price. And so there's a lot of upside in this opportunity.
Yeah. All right, so let's look at the investment overview as a whole, right? So this kind of map in the center, this is what Family Dollar looks like if we back out all the other dots. We back out Dollar Tree and we back out Dollar General.
Pretty impressive.
You can still,
yeah,
they still have an impressive map of what things look like. But again, overall contract price of $1.52 million is what we're paying for it. Our all-in basis at 1.64. And then we can see on the right-hand side here, like, what does it look like in year one? And we always then look at year 5
And
for our
so,
returns.
immediately we're gonna spin off about a 6.5% cash on cash return. So everybody's getting their check. Of course, every triple net deal. Your father loves these deals. You get your check quarter after closing. And then, in year 5, we're gonna get to almost an 8% cash on cash return. And then if we don't sell it, just the cash on cash or the, total investment return with not selling it at all is gonna be 12%. But also there's a little point in the top left that, very important, that the seller is actually giving us $40,000 to do some updates to the property too. So we negotiated a seller credit where we're gonna paint the building, make it look really pretty, and make the parking lot look really pretty too. And so that's gonna happen right away when we buy it. And so that means we get an immediate value because we just made the place look a lot nicer too.
All right, so year 5, you see this, our net annual cash flow jumps to $51,366. But in year 1, we're at $41,564. So we have this big increase in rent that's happening. That some deals are staggered each year. In this instance, it happens in year 5.
Correct.
Right. So the first 4 years are going to be the same rent, essentially the same cash flow. We increase our total investment returns, we pay off principal as well. All right, so if we look at one of our favorite things to look at is
This is Dave's favorite thing.
Dave's favorite thing to look at.
Yes.
I think it's a good data point.
It's a very good data.
We've, this whole year in 2021, we've really been focused on utilizing technology and data to be able to make more informed decisions and help guide us, especially in any investment decision that we're making. So this year, we really started using this Placer AI website data pretty intensely throughout our business here at Greenleaf. And it's aggregating cell phone data to track movement. And this enables us to see where people are coming from, where they're going, and how long they stay at a specific spot. And in this instance, with Family Dollar, we're able to not only see this Family Dollar, we're able to see all of the Family Dollars nationally to see how it compares. Our goal, if we look at things from a data standpoint in a bell curve, if you're familiar with the bell curve, you've got the center 50%. We want to buy stuff on the upper end of that.
It's quite the upper end though.
Yeah, so this is quite the upper end, but we're looking to get a little more technical, and we want at least one standard deviation, which is 67% or higher for all of our deals. That puts us in making sure that the deal we're buying is a top performer compared to other deals in the same category. Here, we're in the 80th percentile. So that means this specific Family Dollar is better than 8 out of 10 Family Dollars throughout the country. And the numbers kind of trickle through. That's nationally. But in Georgia, there's 343 Family Dollars, and this one is the 52nd best performing, simply from number of people that go there. We don't get exact financials on a store-by-store basis. We try and we do the best research we can, but this is the only data point that we have that we can really say, like, hey, we know a retail outlet will do better if more people go to it.
Yeah, and we do know that this store during its peak, which COVID of course impacted all the business, but it was a $2 million Family Dollar, which is a pretty good, pretty good sized Family Dollar. So
we can tie that foot traffic to what people spend, especially in the dollar store segment. And then if we boil down to this last one, within 15 miles, this is why the maps look so colored in. Within 15 miles, first of all, there's 69 of these locations within a 15-mile radius, which is pretty nuts. This is the 13th best one within a 15-mile radius.
15-mile radius, that is pretty much metro.
That's all,
that's pretty much all metro Atlanta.
Yeah.
So, but also don't forget the important points too. We talked about this a little bit before, but the vehicle per day count on this store, the cars that pass it is absolutely insane. It's 44,000. And when we hit 20,000 for a store, we get excited. But this is actually 40,000 per day. So this is double what we would perceive as a high performing store. And the population count is almost triple the same of what we would look at. So not only do we have the population, we have the traffic count, we have the population density to support this business. Yeah. And the other important point, which is also income. So who shops at
Yeah,
Family
so,
Dollar?
I mean, it's predominantly middle income families that are shopping, specifically more families than individuals, right?
Right.
Once you get in that family segment, all your costs kind of go up.
And so the income that in this area, the 1 to 10 mile, the 1 to 10 minute drive radius, is anywhere from 52,000 to about 59,000. So it's that key middle income demographic that shops at this type of business. So it's just best of all worlds. Right demographic, lots of traffic, lots of population, and we know there's a lot of people walking in the door.
Yeah.
Checks
So,
checks
yeah, all of our
boxes.
data points here check out for us to be comfortable with how this Family Dollar performs. And really, when this one came on the market, we ran these numbers, and just to look at the data points on it, like, wow, this looks really good. We need to dig into this some more and see what we can do here. And then especially kind of ties in as we look at the whole dollar store concept as a whole. So, all right, so return wise, you can see here we're laying things out from year 1 through year 5. And we mentioned this before that the deal level cash flow, it's the same for year 1 through year 4. And then in year 5, we have this jump.
Year 5 is the rent bump, right?
So when we do our analysis, our total investment returns, they're going up a little bit each year. And that's from principal paid.
Right, so the cash on cash return stays the same, but if you notice the actual total investment return goes up every year. But then also you have to pay attention to the exit return. So when you sell this thing, we'll sell it in year 4.5 or year 5, right before the rent bump kicks in. So essentially day 1, hopefully that new tenant who buys it has the rent bump and they're getting the appreciation right there. And this is a very important too, from the comp slide. Remember that the comps are at a 5.8 cap rate. We modeled a very conservative sell point at 6.75%. So at a 6.75% cap sale, we're roughly at a 14% overall project return. And if we get to the 6.5 or 6.25 sale, we're getting into a 15 to 16 to 17. And that's a pretty good return for this type of property.
Yeah,
There's very little maintenance, very little management for us. And we know it's a top performing store.
yeah, with that many people going to the store, we know it's performing.
Oh, and for us, it'll be easy to sell too, because we know the data and people will come to us and say, look, this is the store, this is what we know about it. It's going to be a winner.
Yeah, so we feel like we're taking a pretty conservative approach on the exit, and we very much like the stable cash flow. We know it had this year 5 rent bump coming. So we're gonna turn it over to Dominique, who's gonna go through some kind of the timelines on what we're looking at here, and then we're gonna jump in with Natalie and go through some Q&A.
Thanks, Dave. As always, we like to leave you with some upcoming dates. First, we'll discuss Family Dollars. For those who have already submitted your investment interest with us, you should expect your subscription agreements to become available by October 29th. We ask for those as well as funds to be due by November 9th, and that to prepare for closing on November 22nd. Again, right before Thanksgiving.
If we could.
Okay, this does conclude our regularly scheduled program, but I will pass it over to Natalie to begin our Q&A.
Great, thank you, Dominique, and thank you to everyone who submitted questions. We also want to remind you that you can continue to use the Q&A feature at the bottom of your screen to submit questions as we work through those that have come in so far. So we'll dive in. First, if Family Dollar is owned by Dollar Tree, is Greenleaf looking to purchase Dollar Trees in the future?
I would say everything we do right now is a good piece of dirt with a good business. And if we find a Dollar Tree that is on a good piece of dirt and all the metrics work, it is definitely a candidate for purchase. And we've looked at Dollar Trees before. In fact, there's one, oh my God, I forgot where it was. We drove there and literally there was no access to the Dollar Tree. They're doing some road construction, so you couldn't even turn into the Dollar Tree. You had to go past it and go make a right turn and go around. And I just said, no, this is not it. And so we've turned down Dollar Trees in the past. So we have actually considered them.
Okay. And in regards to the seller's credit for $40,000, can you remind us again what CapEx projects this will go towards?
After we buy the Family Dollar, number one, we're going to pressure wash the building, make it look prettier. We're going to paint they have a border on top of it that we're going to paint, make it look really pretty. And we're also going to redo the parking lot. There's a couple little parking lot issues and we're going to redo them and patch, seal, restripe. So it'll be a nice black parking lot. And honestly, tell you the truth, we have about $40,000 allocated for that from the seller credit. it should be less than that too. So we will have a little bit of money left over from our CapEx too. And this is not included inside this is included inside the purchase price. And so this is a seller credit. So essentially we're still buying the property for about 1.52 million, but we're getting that $40,000 credit from that. So effectively the purchase price is about 1.48.
Our next question is a competition question. Dollar Tree recently announced they will begin to sell goods priced more than $1. This could then have Dollar Tree and Family Dollar competing for business against one another, being the same corporation. In turn, this could force corporate to close either Family Dollar or Dollar Trees located in close proximity to one another, as foot traffic may be reduced in each store. So did you look at how close this Family Dollar is to a Dollar Tree?
That's a very long question, but that's a very good question. So absolutely. So one of the things, the first question, when we look at any dollar store, we look at a Dollar General, Family Dollar, a Dollar Tree, we actually look at the circumference around the store and see how many stores are around it. And for this particular store, there is a Dollar General within a certain distance of it, but not close enough to actually impact it. And we also looked at that Dollar General, and we hear things such as the Dollar General is having staffing issues and so on and so forth, and they're having problems. But this Family Dollar is actually operating better than the Dollar General. It's actually close to it.
Yeah, they're basically looking to have stores every 5 miles.
Right, and they after the merger in 2015, they did their company merger, and if there was a Family Dollar across the street from a Dollar Tree, there was some consolidation because any company is going to do that. And so at this point, this particular store is not at risk for closing because of competition, because there is no Family Dollar across the street, or there is no Dollar General across the street. So
Or Dollar Tree. Yeah.
there's no
And we-
Dollar Tree or Family or Dollar General. Yeah.
And these, with that in mind too, as a brand, they're actually opening like Dollar Tree, Family Dollar combined brand stores, which should be interesting on how that works.
Oh, and David Wiseman, my acquisition manager partner, he gave me a whole lecture on how they're doing this. And so they're going to have a Family Dollar and a Dollar branded. They're going to have the logo, the two logos at the top.
Two logos on one store.
And literally the store is kind of like split in half with a Family Dollar theme on one side and the Dollar Tree theme on the other side, which I thought was interesting, but I haven't seen one of those yet.
Yeah.
Okay, great. How are you able to acquire this deal at a very favorable cap rate?
Because we look endlessly.
The amount of, just really the sheer amount of deals that we're going through on a weekly basis is pretty extensive.
It's ginormous.
And when we do find one that we like, just being able to move quickly and confidently to reassure the selling partners that we can execute on what we're saying.
Honestly, if we look at 100 deals, first of all, within 5 minutes of looking at a brand new deal, we're going to know whether we're going to make an offer on it typically. And then we just do the workup, we make sure the data looks okay. And typically, if we have a deal we really like, in fact, our Applebee's Seneca, I think we put a PSA under we put an LOI together within just a day or so. It might have even been the same Family Dollar, I have to ask David. But we're typically pretty quick on properties we know we're going to buy. And the analogy I give everybody is that if we look at 100 properties, we score them, we use our metrics, 5 of them float to the top. And of those 5 that float to the top, we make offers on them. And then, one of those 5, we typically will move forward on them. But we're only looking at the top.
Yeah, that's a lot of time in front of brokers and speaking with them and going through deals so that when they have one for sale, they're thinking Greenleaf, when they have it.
I have to look at the metrics, but I think roughly we have a scoring strategy, and I think we've probably scored, at least 500 properties this year.
We have that Greenleaf special sauce.
Greenleaf special sauce. Greenleaf special sauce. We should use that.
I don't know if our cooking abilities are as good as our real estate finance.
I don't have cook. I don't know about you.
Our next question is about the lease terms. So can you review those for us?
The lease terms, I don't know the exact date, but it's roughly 5 years. I think it's about 4.5 years, and our debt matches the lease term. And right at that transition point, so usually 6 months before the lease actually renews, we engage Dollar General or Family Dollar or Dollar Tree, whatever the company is, get the lease renewal, and that's typically when we list it for sale. I think the lease term was on the first page.
Yeah, but the lease, basically the lease is, the end of the lease is the end of our loan and also the stopping point for when the new lease terms kick in.
Right, so our strategy is always to hold for that lease term. and
Get
then
that
resell.
rental bump.
But-
and then-
Things change, you know, if the properties are selling at crazy high values and we can't replace the money, we can't replace the cash flow, sometimes it just makes sense to keep it and people just appreciate the cash flow.
That's great.
Yeah, those
lead-in.
lease terms, I mean, it's set for the first time period. At the end of the lease is when that 5 years when the rent goes up.
And this lease does end in January 2026.
Great lead into our last question. Can you review the debt terms with us?
Debt terms, yes, we are using True Line Bank again, True Line Bank, which is, actually, I guess it's not True Line Bank. It's
Credit union?
True Line Credit Union, phenomenal Greenleaf partner and lender right now. I think we're trying to count the deals we've done with them. We've done about 8 deals with them so far, so it's a very, very easy loan. Well, typically they gave us the same terms on this deal. We did a DQ and a few other deals, so it's gonna be 3.5% loan, 25-year amortization, 5-year term, and it'll be a 3.5% loan.
Wonderful. Those are all the questions we have for you today. Again, we want to thank everyone for participating. And of course, we want to thank Dave and Andrew for sharing the details of our new Family Dollar with us. As we wrap this up, we'll pitch it back over to Dominique to review our upcoming dates and live stream schedule.
Yes, thank you, everybody, for joining us this afternoon, especially to do an overview of Family Dollar and what a treat it is to understand the differences between the dollar store comparison. Next week, we do have our new offering for Taco John's deal overview, and then we will dive into our next retail that Andrew kind of gave a sneak peek to, offering Applebee's in Seneca, South Carolina. We do have an upcoming industrial deal to present to our investors, Covington Flex. So that is on the calendar and will be announced fairly soon. And then just a quick reminder for our IRA and ETC IRA investors, we still do have that Build Back Better Act discussion on the books, and we will send further details as soon as possible. All right. Something to mix up the flow of our regularly scheduled program. This is a friendly reminder that we invite everyone to our Greenleaf Annual Investor Forum. That will be from November 3rd through the 4th and I believe 5th. So I'm going to share the reservation link with you all through this live stream. And we kindly ask for you to RSVP at your earliest convenience. We're super excited about this event, and any and everybody are welcome. So thank you so much for joining us today. This concludes our regularly scheduled program. Again, this is a friendly reminder that this live stream is recorded and will be shared by the end of the week this week. That's all we have today.
Is this where you cue up the Applebee's Fancy Like song?
I was going to ask, when we do that one, are you going to do the dance for us, Andrew?
No, they
Oh,
might do
Andrew will
dance
be dancing.
together.
That'll be,
Yes.
oh man,
I
Cody.
can bring my styrofoam cup,
And the
and Dominique can bring her cup with 2 straws. That's
Yeah.
in there.
and then Nat, what is it called? Natty? Natty.
Yep. Natty ice.
All right, well, thank you very much,
Thank you,
everyone.
guys. Bye.